Welcome, and on this video we're going to do the gross profit method. It's a way of estimating inventory. And it's used a lot of times between interim reports and also for insurance purposes for incomplete records. And I have a few guidelines that we have. And the first thing is you take 100% minus your gross profit percentage equal the cost of goods sold percentage. So what this is equal to is basically you have sales, and then you have your cost of goods sold, and that equals then gross profit when you subtract them. Okay, a very basic type of thing. So if sales are, say, $200, cost of goods sold is $150, means gross profit is 50, right? Well, to get your gross profit percentage, you would take 50 divided by 200, which would give you 25%, which means sales then is 100%, and this would have to equal 75%. Okay, so very simple concept. Now the key on this though is to make sure that the percentage is it's a gross profit percentage, not a percent of cost of goods sold. Because you could have, let's say, if this was 100%, and let's say this one was 33%, that makes this one up here 133. To get the percentages you want, then divide everything by 133. So you'd have equal to 133 divided by 133, and that gives you 100%. Then divide them out, and if you want those as percentages, that's our percentages then. Okay. So we want this group of percentages. We want gross profit as a percent of sales, not a percent of cost of goods sold. Okay, so that's how you do that. Make sure you read it carefully. If it was a percent of sales or a percent of cost of goods, percent of cost. Okay, that's the first thing. Then you find the goods available for sale. And then you find net sales. Then take net sales times your cost of goods sold, and then take goods available for sale minus your cost of goods sold at cost, not cast. Okay. So we start with, we have 100% minus 40%, which equals 60%. That's step A. That's this part right here. Okay, that's what we did here. Okay, then we just simply beginning inventory is 20,000. Our purchases, again, you want to use net purchases, but that was 160. Freight in was 5,000. So over here, that gives us 160 plus the 5,000, or 165,000. So goods available for sale is the 20 plus the 165. Okay, if you have purchase returns, of course, you'd subtract them off. Okay. Then we have sales of 210. We have sales returns of 8. Which those two we do subtract off, minus the 8,000 gives us 202. Our cost of goods sold, remember, was 60%, that percentage. So to get this one, we take the 202,000 times the 60%, or the 121. So the estimated ending inventory is the 185 minus the 121, or $63,800. Now, if this was a fire and you have consigned goods, that would be subtracted off because you didn't lose your consigned goods unless both places burnt, and that would get suspicious. But that's really all there is to this one. So it's not too bad. So hopefully it's straightforward. And hope that helps. This is a gross profit method.